All right, good morning. We're going to talk about stock market data charts today in this video. The graphical form of a stock data can be presented in a couple different stock charts, and a common one is the stock bar chart, and that's kind of shown below for Johnston Electric on April 30th. So notice that the chart consists of two bar graphs. The top shows the daily information about the day's high, low, open, and close, and the bottom is for volume. And notice on the right, that volume is in millions. So a couple things to note. There's always going to be to the left a horizontal bar where the stock opened, and on the right, there's going to be a horizontal bar where it closed. The low is at the very bottom and the high is at the very top. Excuse me. So let's go ahead and look at our first example. So here we're going to learn how to interpret and create stock charts. So here's one for April 20th, Gold Point Manufacturing Company. So notice that this is for several days. The top half is the day's trading prices. So, and that where we're talking the top half of the grid, the bottom half where the blue bars are is the day's volume. So the top of each bar is the day's high price. And so you can see May 2nd had the highest price. So looking at the blue bars again, which day was the lowest? Well, you can see that the lowest was on April 29th. And so that would correlate to right there. For the check your understanding, between which 2 days did after hours trading appear to have the biggest impact on the difference between closing price and the following day's open price? So if you look here, between April 29th to April 30th, so April 29th and April 30th, these little bars here, the 29th, that was the close, and for the 30th, that would be the open, the close and the open. And so between the 29th and the 30th, we've had the biggest difference in after hours trading. Example 2, approximately how many shares of Gold Point Manufacturing Company were traded over the 5-day period? So this is where you're going to approximate. And so I'm going to look here, like if I looked here, I'm going to call that about 185 million. Here, let's call that about 70 million. April 30th, we're going to call that about 75 million. And again, we're going to call that about 70 million. And on May 2nd, that looks to be about 90 million. I don't know why when I scroll things don't stay where they're supposed to. That zero is supposed to be right here. Okay. All right. So adding those up, approximately 490 million shares were traded in that 5-day period. So using the stock bar chart to write a brief financial story of the trading action that occurred for Gold Point Manufacturing Company on April 28th and April 29th, begin your story with, on April 29th, one share of Gold Point Manufacturing Company opened at $8.15 during the day. Let's go up there and look at that $8.15. This is where it opened, right? All right. So on 4/28, opened at $8.15. It went as high as $8.43 and as low as $8.10. Finally, it closed at $8.21. There was some after-hours trading. So on 4/29, it opened at $8.23. And it's high. Is $8.38 when it's low is $8.08 and then finally closed $8.12. And so going up here, you're looking at the little horizontal bars. You're looking at the top of the green and the bottom of the green for each of those 2 days. Example 3, we want to use the information below to construct a 1-day stock chart bar for Brown Armor Corporation. So I just put the diagram here. So again, let's make sure that we understand all the parts of this type of chart. Right here, the high for the day. Right here, the open, that horizontal bar. And this bar, this is the close. And down here, this is the low. And the check your understanding says, suppose that trading was suspended for one entire day of a corporation. What might that stock bar chart look like? It'd be blank. Or you could just have horizontal lines going across. But for that day, if they suspended, there wouldn't be anything in the chart to look at. The next kind of chart we're going to look at is the candlestick chart. And it's similar to the bar chart. A candlestick chart might be easier to read and contains more information at a glance. The top and the bottom of the vertical line indicates the high and low prices over the given time period. The rectangular region is known as the real body. It visually offers the difference between the open and the closed price for the trading day, and it's displayed in 2 different colors depending on the action for the day on that stock. So it's got the little stick up top, the highest price for the day, It's the open or closing price. The body's black or red if stock closes lower than opening price. The body's white or green if it closed higher than opening price. Got the opening, closing price, and the lowest price for the day. So we're going to do 2 more examples here. All right, colors used to indicate the changes in the day's prices can be customized. The candlestick chart for September 7th through 11th depicts market action for a particular stock for 5 days in September. The green indicates that the closing price is greater than the opening price. The red indicates the opposite. The closing price is less than the opening price. So explain the difference between the market action on September 8th compared to September 9th, shown in the candlestick chart for September 7th through 11th. So we're going to look at the 2 days, September 8th and 9th. Notice one is green, one is red. So on September 8th, it's green, meaning let's go back up here. Green means the closing price is greater than the opening price. And then on September 9th, it's red. What does that mean? Closing price is less than opening. It closed lower than it opened. So check your understanding. Interpret a green candlestick that is shown only as a rectangle with no lines at the top or at the bottom. So without lines at the top or the bottom means the closing was the high for the day. And the opening was the low for the day. Example 5. What was the approximate difference between the highest price and the lowest price for the week shown in the candlestick chart for September 7th through 11th? All right, well, let's go back up here. The highest price is like right here. We're going to call that about $30.90. And the lowest was over here on September 11th. And that's about halfway in between, $37.75. So the question says, what was the approximate difference between the highest price and the lowest price for the week shown in the candlestick? Well, we take $39.90 and subtract $37.75. Then for the week, the difference between the highest price and the lowest price is about $2.15. Finally, check your understanding. The lengths of the candlesticks for September 8th and 11th are approximately the same. What does this mean about the trading prices in both of those days? So we're going to say the difference between each day's high and each day's low is about the same. The difference between each day's high and each day's low is about the same. There you go.